The mindset that turns $100 traders into millionaires is not loud, not flashy, and not built on excitement. It begins quietly, in the exact moment you realize that the way you think right now is the very thing holding you back. Most traders remember the first time they deposited $100. It felt small, almost meaningless, like a lottery ticket rather than a responsibility. Deep down, the mind whispered that this money was disposable, that it existed to be flipped fast or lost without consequence. And in that moment, without realizing it, the trader stepped into a dangerous mental trap. Because the way you treat $100 is exactly how you would treat $100,000, only with more zeros and more pain. The moment money hits the account, something strange happens inside the mind. Logic steps aside and imagination takes control. You don't see charts anymore, you see outcomes. You see a future where this small account explodes into freedom, or one perfect trade changes everything. And the market senses this hunger. It feeds on it. Every candle feels like an opportunity, every small move feels urgent, and patience starts to feel like weakness. This is where most traders begin to lose, long before they ever place a trade. Turning $100 into $1 million is not about speed. It is not about finding the perfect indicator, the secret strategy, or the one trade that makes you feel invincible. It is about learning how to think in years while everyone else is thinking in minutes. It is about rewiring a brain that has been trained by instant gratification into one that respects time, process, and quiet discipline. This is the compounding mindset, and it is deeply uncomfortable for people who crave fast results. The compounding mindset feels boring at first. It doesn't give you the adrenaline rush of oversized positions or the emotional high of doubling your account overnight. Instead, it asks you to do something far harder. It asks you to slow down, to accept small gains, to sit with uncertainty, to protect capital as if it were sacred. Most traders reject this mindset because it feels too simple, too slow, too ordinary. But history shows us something powerful. Every real fortune, in trading and in life, was built this way. The average trader looks at $100 and thinks about what it can become quickly. The disciplined trader looks at $100 and thinks about who they must become to grow it safely. This shift is subtle, but it changes everything. Because once you stop obsessing over the money, you start paying attention to behavior. And behavior is where success is born or destroyed. Imagine planting a seed in the ground. You don't dig it up every day to see if it's growing. You don't pour all the water on it at once hoping it grows faster. You protect it. You give it what it needs. You wait. Trading works the same way. Every time you overtrade, every time you chase a setup out of boredom, every time you risk too much because the account feels small, you are digging up the seed. And then you wonder why nothing ever grows. Fear and greed don't announce themselves loudly. They show up quietly, disguised as logic. Fear tells you to close winning trades too early because you're afraid of losing what you finally gained. Greed tells you to increase position size because this time feels different. FOMO convinces you that if you don't take this trade right now, you'll miss the move that changes your life. Overtrading makes you feel productive while slowly draining your account and your confidence. Revenge trading feels justified because you just want to get back to even. And self-sabotage feels invisible because it wears the mask of effort. Every trader has felt it. That moment after a loss when the chest tightens, the jaw clenches, and the mind races. You tell yourself you'll be disciplined, but the screen pulls you back in. You start seeing setups that weren't there before. You convince yourself that one more trade will fix everything. And slowly, quietly, you drift further away from your plan. This is not a strategy problem. This is a psychological battle, and it is where most accounts are lost. The compounding mindset forces you to redefine what success feels like. Success is no longer about winning today. It is about surviving long enough to let probability work. It is about measuring progress in discipline, not dollars. A trader with this mindset doesn't feel excited by a big win and doesn't feel destroyed by a loss. They feel calm. And that calm is dangerous to the market, because it means emotions are no longer in control. Think about what 5% a week feels like on a $100 account. It feels insignificant. Almost insulting. $5 doesn't change your life. But that is exactly why this mindset filters people out. Most traders cannot emotionally tolerate small progress. Their ego wants validation now. But the math does not care about ego. Over time, that same boring 5% compounds into numbers that feel unreal. And when the account grows, the mindset stays the same. The process does not change, only the scale. The trader who survives long enough to grow small capital learns something powerful. Losses stop feeling personal. A loss becomes information, not an insult. When risk is controlled and predefined, there is no shock when a trade fails. It was already accepted before entry. This emotional acceptance is what protects you from revenge trading. The moment you feel the urge to get money back quickly, you have already lost the mental game. Chasing quick money keeps the nervous system in a constant state of tension. Every tick feels heavy. Every pullback feels threatening. You can't think clearly because your mind is stuck in survival mode. The compounding mindset removes this pressure. It tells you that there will always be another trade, another setup, another opportunity. It frees you from urgency, and in that freedom, decision-making improves. Comparison is another silent killer. Social media shows highlight reels, not blown accounts. You see traders posting massive wins and you question yourself. You feel behind. You feel small. And that feeling pushes you to take risks you are not ready for. The compounding mindset ignores the noise. It keeps your eyes on your own path, your own rules, your own pace. Because the market doesn't reward speed. It rewards consistency. When you start small and trade properly, you are building something far more valuable than money. You are building identity. You are training yourself to think like a professional instead of a gambler. Professionals don't chase. They wait. They execute. They accept uncertainty. Gamblers need excitement. They need action. And the market is ruthless with gamblers. Patience is not what most people think it is. It is not simply waiting. It is waiting without self-destruction. It is the ability to sit in front of the screen and do nothing while your mind screams at you to act. The market is designed to trigger impatience. Every candle whispers opportunity. Every move feels like a chance. And if you cannot resist that pull, you will trade constantly and wonder why nothing works. Ruthless patience means you only act when conditions are perfect according to your rules. Not almost perfect. Not good enough. Perfect. This feels wrong to the brain because the brain equates action with progress. But in trading, unnecessary action is often the fastest way backward. There are traders who make more in a handful of trades than others make in hundreds. Not because they are smarter, but because they wait. They understand that not trading is a position. They understand that capital and mental energy are resources to be protected. They don't feel guilty for sitting out. They feel powerful. The hardest test of patience comes during drawdowns. When you are losing, every part of you wants to fix it immediately. The patient trader steps back. The impatient trader doubles down. One survives. The other spirals. This is where discipline either holds or collapses. Missed trades are another psychological trap. You skip a setup because it doesn't meet your rules, and then you watch price explode without you. The mind tells you that you are wrong. But a strong process accepts missed winners as the cost of consistency. You are not here to catch every move. You are here to protect your edge. Patience also shows up after entry. Impatience cuts winners short and lets losers run. Patience lets probabilities play out. This is why two traders with the same strategy can have completely different results. One trusts the process. The other interferes. At the core of all of this is emotional detachment. The market is not judging you. A loss is not a statement about your intelligence or your future. It is simply one outcome in a long series. When you attach your identity to trades, you give the market emotional power over you. And it will use it. Revenge trading is born from wounded ego. You don't just want your money back. You want to feel right again. The market does not care about your feelings. It only responds to discipline and probability. The moment you trade to feel better instead of to execute your plan, you are no longer trading. You are coping. Detachment does not mean you don't care. It means you care about the right things. You care about execution. You care about risk. You care about consistency. Wins and losses become neutral. Just data. When risk is small enough that losses don't hurt emotionally, clarity returns. You stop hesitating. You stop chasing. You stop forcing. And slowly, almost quietly, your results begin to stabilize. Ego is another invisible enemy. Ego wants to be right. Ego wants to prove something. Ego keeps you in bad trades because admitting you're wrong feels painful. Humility cuts losses quickly and moves on. And humility survives. Trading is not about prediction. It is about management. Managing risk. Managing emotions. Managing behavior. Losses are business expenses. Nothing more. Markets change. Strategies stop working. Conditions shift. The trader who survives adapts. The trader who clings to what used to work gets punished. Adaptation is not weakness. It is intelligence. Relentless adaptation means you are never married to a method. You use what works now, and you let go when it doesn't. Ego resists change. Discipline embraces it. Some months the market gives generously. Other months it teaches restraint. Both are valuable. The adaptive trader listens instead of fighting. This adaptation includes your mental state. Some days you are sharp. Some days you are not. A disciplined trader adjusts size or steps away. An undisciplined trader forces trades and pays the price. Every level of growth demands a new version of you. The $100 trader who becomes a millionaire is not the one with the best system. It is the one who evolves again and again without breaking. The market owes you nothing. It does not reward effort alone. It rewards alignment. When your mindset, behavior, and risk are aligned, growth becomes inevitable. The mindset that turns $100 traders into millionaires is built on discipline, patience, emotional control, and adaptation. It is quiet. It is slow. It is powerful. And once you truly internalize it, the size of your account no longer defines your potential. It simply reflects where you are on the journey.